Good morning and welcome. You're watching the Small and Mid-Cap Show here on NDTV Profit. I'm Hersh Sayta. And, before we go and start discussing about some small and mid-caps, interesting ones today, let me first off have a quick look at where markets are. You're seeing markets very close to all-time highs. In fact, touching the all-time high and coming straight back off. We're at the day's high as well, of course, given that we're so close to the all-time high. That's where we are on the Nifty. Let's quickly try and pull up the constituents to see which stocks are essentially carrying the market forward, at least in trade today, or holding the market up above those levels where we saw yesterday. We are looking at a completely fresh set of stocks. You're seeing the likes of an L&T, ICICI Bank, Titan, Bajaj Finance lead the pack today. In fact, Bajaj Finance was a key loser in trade yesterday. And you're seeing some of those tech stocks along with HDFC Bank, RIL, Infi actually drag the markets. So we're seeing a bit of a cool off on that. So it's a new set of winners that we are seeing in trade today. That's very evident. In fact, HDFC, RIL, Infi were probably the three top gainers in terms of contributories in trade yesterday. And we're seeing those on the losers list today. So that's where we're at, where the Nifty 50 is concerned. Quickly moving on to where the mid and the small cap index is going. We're seeing good gains on both the mid cap, especially the mid cap, up around 1/3%, building on the gains from yesterday, around 0.5% higher for the small cap as well. So both of those continuing to rise. Let's quickly look at sectors if we can. First off, the Nifty Bank up around 0.25% or thereabouts, but outside of that, you're seeing the leader of the pack being the Nifty PSU Bank up around 1% or thereabouts. You're seeing Nifty Realty being the top loser among sectors. Nifty IT also, no surprise there after seeing how Infi and HCL are probably the top two or the bottom two contributories on the Nifty 50 in terms of negative contributories, the top two. You're seeing also some drag coming in from the Nifty Pharma Index. But I want to quickly try and highlight some of the ones which were trailing in trade yesterday. The Nifty Media, if we make, and we have the constituents there up around 1% in trade today after being one of the top losers yesterday, and the Nifty Metal as well, which is up around 0.5%. Again, after having a soft day of trade yesterday in the red, when markets were at a record high. But it's time to switch focus in on one or two stocks, companies, which we always do on this show. Let me start off by introducing Man Industries. Companies in focus, 400 crore order win. We have the management, Ramesh, Chandra, Mansukhani, who's the chairman of Man Industries, with us to talk to us about that win. The stock is up and away in trade. If we can have the graph of the stock as well. That'll indicate that the stock is up and away. So it's a large order. Firstly, welcome to NDTV Profit. Good morning. Right. Sure, I think we are on a patchy line there. But there you go. The stock of Man Industries up 6% on the back of that order win. In terms of the Q2 numbers, you saw a good solid set come in. Of course, now we're at the cusp of Q3. But that's probably just to give you perspective on where we were at the end of Q2 so that, one understands as to how large the order is. Q2 in terms of revenue, the company did around 1,037 odd crore of revenue. So the 400 crore order win is quite large. Also, it has an order book of 1,300 crore and we have Ramesh, Chandra, Mansukhani back with us. Sir, talk to us about this 400 crore order. It's a largest order when I'm looking at, the way the company's, performing and playing out. But talk to us more about this. The order pipeline currently is roughly 1,300 crore. You have 6 odd months to execute these, is what you've indicated. What's the traction like in the market? Are we seeing or are we expected to see bigger and better order wins coming through both in FY24 for whatever is left as well as in the first half of FY25? What's the visibility like?
Yeah. Good morning, Hersh. Thank you. The order book is comfortable. This 400 crore historically is not a very big order in our company. But this is a good order, we can say. And the bid, whatever we participated this time, the worldwide is approximately 14 to 15,000 crore rupees. So this is ongoing process. We have to declare this thing because we got the mix of the order, not a single order, but good order mix. It will be completed in 6 months, and we are awaiting some other news also in coming times.
Right, sir. Sir, when I'm looking at your numbers, you clocked around 2200 crore of revenue in the last year, FY23. You have guided for a roughly 3,000 crore kind of a number in FY24. How confident are you of achieving that? That's my first point. Second point, as you start executing, would you want to build up a larger order book than the 1,300 odd crore of order book that you already have?
Yeah, to achieve whatever target we kept last year, to achieving we are a close. That we will achieve it, we are expecting to achieve it. And the futuristic, right now, it is not good to announce anything because our results only next week. So that's why we are carefully in the guidance, but company order book is comfortable, bid is comfortable, with growth moment will continue. The new business which are coming, which will continue growth booster. That's why I can say overall the things are very positive as regard to main industries.
Understood. So when it comes to margins, right, as you continue to grow your order book and, overall we're seeing good traction in the infra space. So as you continue to grow your order book, how are margins really expected to trend? Because you're currently at higher single digits. Would one expect you to go into double digits in the current financial year? Would you probably hope to do that in FY25? Where should that trend?
Our always the objective and our aim to achieve the better EBITDA. Although last year we said it would be around 10%, but the mix up because some products and we are to the product mix basis. But our endeavor always to go the better margin business. We are expecting 24, 25 should be much better because our lot of investment, whatever we did, their result yet to come, and their result will come in 24, 25. Then some high API grade business, high coating value addition items, and some other products also coming in the company. So I hope and expect it to will improve in coming times. So our objective is to get the more rewards to our shareholders.
Right, and just for the benefit of our viewers, if you could try and break down which of your products have a higher margin or are margin accretive for you going into FY25, and what is the kind of opportunity in that particular set of products out of the 15,000 crore which you highlighted in terms of the size of outstanding bids that the company could continue to bid for?
Yeah, Harsha, actually the oil and gas sector, hydrocarbon, some export where we got some breakthrough. We are the approved vendor. That is our aim. The hydrocarbon sector having little bit better margin. The water business in India domestic market having little bit low EBITDA. But that's why our 70-80% is the hydrocarbon sector, 20-30% is the domestic water pipelines. And hydrocarbon sector also mix up export as well as the domestic. So we are seeing the good growth after the election also, but as well as we are not dependent on only one country. We have the worldwide bid position. That's why we keep insulated our company, whatever position worldwide is going on in future. Yeah.
Sure. And out of the 15,000 crore, what would what part would comprise more of, or rather, margin accretive business, and how much out of this 15,000 crore would you hope to win? There may be some internal targets that you may have set, but a broad level number on how much would you hope to win in terms of the orders that you're bidding for?
Yeah. very difficult question. But we endeavor to get the more business. Our capacity utilization should be much more better in coming time. As well as the most important, because we put a lot of capex last year, and there is no loan in the company actually. It's almost debt is 0.1% in the company net debt equity ratio. So we are comfortable, but our objective to do much better next year. This year very closing. We have the proper order book position to complete this year comfortably, and then as well as to go ahead for the 24-25 with the bright future and bright profit margin.
Sure. Thank you so much, Mr. Mansukhani, for breaking that down for us. We'll let you go on that note. It's time we slip into a very short break. Just quickly marking out the stock price of Man Industries, if we may, while on the way out. But we have also the management of LG Equipment. So we have Jairam Varadaraj, who is the MD of LG Equipment. He's going to join in to talk to us about the growth outlook, order book execution plans, all of that on the other side. So stay tuned to NDTV Profit.
Welcome back. You're watching the Small and Mid-Cap Show. Now, another company that has been on our radar is LG Equipment. Clearly, as we know, manufacturer of a wide range of air compressors, which forms little over 90% of their total revenues, and automotive equipment is the other part. A good market share is what they hold in the Indian air compressor market as well. And expansion in the international geographies is what everyone has been eyeing. Let's welcome in Dr. Jairam Varadaraj, Managing Director at LG Equipment, to talk more. Dr. Jairam, good morning and welcome to the show.
Good morning. Thank you so much for having us.
Always a pleasure to speak to you. My first question coming to you is, one of the things that the street and the investors were looking out for was a strong revenue CAGR growth between FY23 to 25, which would be led by the air compressor business, and a growth of around, say, 16 to 18% is what the street is watching out for. What is your trajectory telling you in terms of performance?
think this year, that is financial year FY24, is going to be a little muted because we had some challenges in specific markets outside India. India has been doing pretty good for us, but Europe, US, and Australia, which are our other large strategic markets, the economic challenges have been pretty significant there. So we are working on new strategies, but I think past FY24, we should be able to deliver those expected numbers.
Right. So what we're saying is that clearly the street was betting big on expansion in the international markets, and that was expected to drive long-term incremental growth, where rest of the world contributed almost 60% in terms of FY23. Now, if there is going to be some bit of muted moves in FY24, how is the bounce back expected to look like in FY25, and what is it that will lead to that bounce back?
So, if you look at the past 2 to 3 years, we've been doing anywhere between 13 to 18% growth at a consolidated level. With India being quite muted, our global growth was actually 20+% in some of these strategic markets. We should get back to those levels of growth in these markets. And what we are basically doing is revisiting our strategy. Our strategy framework is very clearly defining where do we need to play and focus on. And in those focus areas, how do we improve our opportunities to win? And that's our framework, and we are continuing to work on it. There are some interesting new technologies and products that we are introduced already this year, and we will be doing some exciting stuff in the coming year. So all that together will help us move the needle that we are expecting to do.
Right. Dr. Jairam, another question I have is the kind of growth that we saw in FY23 as well. The contribution was around, say, 5 to 6% on the back of the volumes that you saw. 4 to 5% growth came in from the exchange rate. And the price hikes that were taken contributed around 7 to 8% of that growth. Now, if you have to look at FY24 and 25 and take into consideration the volume, exchange rate, as well as price hikes, what will lead to that growth?
In FY24, if you see our performance that we have reported so far, we have had a very, very good, healthy improvement in our margins. And that has primarily come from the margin expansion, which is through better pricing strategy and price realization. That's going to continue through to the balance of the year for FY24. FY25, I expect that we will be able to hold these contribution levels and the levels of profitability with improvement in volumes that are going to come.
Okay.
That's our expectation.
Okay. And with regards to Europe as well, clearly, the anticipation was that the losses will get done in FY24 end and will start showing profitability from FY25 onwards. Does that remain as the trajectory, or do you think because of the muted environment in the international markets, there could be a slight delay on that front?
So the original plan was to break even in FY25, not FY24.
Correct.
And we are on plan for that. We don't see an issue. We will achieve that. So, compared to our original plan for Europe, there was a 1-year shift during the COVID time. So because of that, FY25, we will break even, and FY26 onwards, we will be profitable.
Okay. And how are you seeing the trajectory with regards to where the India business goes? Because that has certainly been doing well. And you have the aftermarket segment in India also, which is helping, right? Because it's almost, say, around little over between the 25 to 30% of the overall revenues. Do you see further business opportunities developing? And do you think the contribution of the India business could increase going ahead as a part of the revenue mix?
I'm not able to comment whether the revenue mix, we don't drive revenue mix. The revenue mix is a result of our business plans. We continue to look at a pretty large percentage coming from outside India. That continues, and that percentage will keep improving because the percentage growth outside India, we plan to be higher than India. So having said that, with all the initiatives that are being rolled out by the government, whether it's the PLI schemes, the investment in infrastructure, we expect that the India story is going to be very strong. Converting that into our own growth, we expect that our growth in India will be higher than what we had in the last few years. Now, summarizing that into the revenue split between India and the rest of the world, earlier we would have probably thought that international or rest of the world business percentages will keep increasing. But I think with India really firing on all cylinders, the percentages may not increase, but I don't see them dropping either.
Okay. And with regards to where the order book goes, where does that stand for the company currently?
So we are not a order book based business. We are primarily a book and bill kind of a business. We are not in major projects. So our project business would be less than 5% of our revenue. So that's not an indicator for our business at all.
Got it. Dr. Jairam, another question I have is that we've largely been concentrating in terms of the air compressor business, right? India exports, rest of the world. Automotive equipment is there, but it's still a minuscule portion. In fact, the trajectory that we see is somewhere on the decline, right? From a 9, I mean, it's in higher single digits. Is there a plan to expand that bit of the business, number one, taking into consideration the kind of growth that we are seeing in the automotive segment? And number two, with EVs evolving, anything new that we are planning to do, what's the strategy going to be?
So our automotive business is a India-centric business. So strategically, we have retained it as an India-centric business. And we are by far the leaders in the Indian market. So that will we will continue to cement that position and consolidate it. Now, in terms of opportunities, the Indian automotive industry has had its own sinusoidal kind of a pattern of growth during the period of COVID and the subsequent supply chain constraints. When they got released, there was a kind of an onrush of demand, which is getting muted right now, which is fine. I mean, we build a business not for the couple of years of change in patterns, but going long into the future, I think the automotive industry will continue to be strong in India. The EV segment has already kicked in, and we have been one of the leaders in terms of building a good portfolio of repair products for the EV industry, whether it is battery management system, battery diagnostics, special handling equipment for dismantling the EV transmission systems. So these are all things that we have already started. So that will continue to push our growth in the future. And the third vertical is the government's focus on scrapping old vehicles that have, gone past their emission norms. So that's becoming a big number, and we are already positioned well in supplying equipment for scrapping centers, things that are done in a very scientific, engineered solution. So we've already started looking at it. And the fourth vertical where there is growth that is going to come is on the safety and emission testing that the government has instituted all over the country. Gujarat, Maharashtra, UP have taken the lead, and the rest of the states are also very serious about it. And we are one of the pioneers there. And we've already got into a licensed production of these test lanes required for these units. So all in all, I think it's got a very positive future, but it's an India-centric business.
Right. And my last question, Dr. Jairam, coming to you is In terms of FY 25-26, we're targeting around 3750 worth of revenues, EBITDA of around 16%, and a ROC of 30%, which is absolutely on the steeper side from where we are currently. Does this remain absolutely on track, or do you think there could be some changes on that number?
Absolutely on track. I don't see the top line challenge being a challenge at all. We're in the last stages of completing our strategic business plan. During the month of February, we will that's when we reset and communicate our, where every time we do a rollover planning, we communicate the revised numbers. We will do that. And I'm pretty sure that we will communicate numbers that are stronger than these at the top line. As far as EBITDA is concerned, if you see the trajectory that we are on, we are within striking distance of it already. So it is only going to get better with an improved top line. And the same thing with return on capital employed. So we are quite confident that we will meet or beat these numbers.
Absolutely. I think that's what the street is watching out for as well. Thank you, Dr. Jairam, so much for joining us on the show and giving us details, because this is something the investors watch out as well. But completely out of time on this edition of the Small and Mid Cap Show. Continue to watch NDTV Profit. Lots more lined up on the other side. Please stay tuned.